The JSE's shot the lights out. The group's annual net profit exceeded 1 billion rand for the first time, following growth of 16.7% on that end. Headline earnings, meanwhile, came in nearly 18% higher as the JSE benefited from renewed national confidence and global interest in South African assets during the period. Outgoing Group CEO Leila Fourie says it's been an exceptional year given market conditions. The group's lifted its ordinary dividend by 16% and declared a special dividend of 100 cents per share. Bidvest has upped its interim dividend by 5.3% to R4.95 per share. That's after delivering solid half-year earnings and strong cash generation. Revenue rose 4% while trading profit climbed 7%, lifting the margin to just over 10%. Normalized headline earnings per share increased 5.3% and the operating cash flow surged 36%, boosting free cash flow to 3.8 billion rand. CEO Mpumi Madisa says the group's international hygiene strategy is gaining traction, although tighter contract pricing and weaker global demand continue to pose risks to margins. RCL has reported a sharp deterioration in first half earnings. The food producer has posted a more than 30% fall in headline earnings per share from continuing operations. That's as South Africa's deepening sugar crisis takes a heavy toll. RCL's sugar division was hit by a surge in low-priced imports, weaker global prices and a stronger rand, forcing more local output into lower-margin export markets. The pressure has prompted the group to cut its interim dividend by 25% to 15 cents per share. Looking ahead, management has warned that inadequate tariff protection is threatening the sustainability of the domestic sugar industry. Italtile has had a tough first half. During the period, the firm faced a stronger currency, weak domestic demand and the dumping of cheap tiles. This contributed to a 14% slump in headline earnings per share to 60.6 cents. An interim dividend of 24 cents per share has been declared. That's down from 28 cents a year earlier. MTN has signaled a dramatic turnaround. The telecoms giant expects annual headline earnings per share to come in at around R12.64. That's sharply higher than the 98 cents it reported a year ago. The dramatic improvement is thanks to its Nigerian operations returning to profitability and strong growth in Ghana. MTN will open its books on the 16th of March. Tungela Resources has flagged a plunge into the red. The miner expects to report a headline loss per share of up to R7.50 for its full year. It's pointed to impairment losses of 8.8 billion rand. That's based on a softer benchmark coal price outlook and a stronger forecast for its producing currencies against the dollar. Exxaro has concluded its 10.6 billion rand acquisition of select manganese assets from Ntsimbintle Holdings and OMH, cementing its entry as a globally significant manganese producer. The transaction gives Exxaro full ownership of that mine, which holds 50.1% of Tshepeburwa mine, which is the world's fourth largest manganese mine. The remaining 49.9% is held by Jupiter Mines, in which Exxaro has also acquired a near 20% stake. The Mokala leg of the transaction remains subject to outstanding conditions, with a long stop date of February 2027. And South Africa's manufacturing sector lost momentum in February. The ABSA PMI has slipped to 47.4, weighed down by weaker business activity and falling employment. On a positive note, manufacturers' outlook improved, signaling cautious optimism despite ongoing challenges like electricity disruptions and port delays.